Hello there, everyone. Welcome to the monthly outlook here on GoToWebinar. I believe there are quite a few of you here. So before we begin in earnest, just want to make sure that all of our technical stuff is in place. So folks, if you can see myself, my name is Han, old guy here on should be on the left side of your screen. And also if you can see Lukman, and you can see our PowerPoint slide. It should be at the bottom half of your screen. And I'll also have Lukman count down from 20 to 0 in just a bit. And then if you can hear myself, you can hear Lukman, and you can see our PowerPoint screen. If you can ask you to just do the digital hand raising, there is an icon off to there's a little tab off the right side of the screen, I believe, that gives you the option to raise your hand. So again, if you can hear myself, you can hear Lukman, and you can see the PowerPoint screen, be sure to give us a hand raise. That way we know our technological components are all in place, and then we can begin in earnest. Okay, so Lukman, go ahead and count down from 20, please, for us.
20, okay, 20, 19, 18, 15, 10, 3, 2, 1. Oh, seems everyone can hear me clearly. Okay. Perfect.
All right, so looks like
Good
Lukman
stuff.
has got to work on his counting skills. Guys,
You know
thank
how
you
bad
all
these
so
are.
much for being here. Again, this is the third monthly outlook in a series. In case you are joining us for the first time, so very warm welcome to you. And then let us know as well if this is your first time joining some of the monthly outlook webinars that we're doing, part of the analysts. All right. So again, my name is Han. I am a market analyst with FXTM, and off to my left is Lukman Otunuga, Senior Research Analyst at FXTM. So obviously, going into this month, it is June 1st. We are beset by some pretty familiar themes, right? We have the threat of another spike in US-China tensions. For those of you who have been following the news, we had US President Donald Trump there threatening to remove the special status of Hong Kong. So we're going to talk a little bit about how that's going to feed into our outlook on the markets for the rest of this month. And also we've got Brexit. All right, so Brexit negotiations are going to commence or resume rather today. The latest round is going to kick today. So we're going to talk about how feeds into the pound. So we've got 4 different assets that we're going to highlight for you, and hopefully you can take away some potential trading opportunities. Now, before we go any further, I just want to start with this very important note, ladies and gentlemen. So just so we're all aware, look, the content that we're going to present in this webinar over the next half an hour or so comprises personal opinions and should not be construed as trading or investment advice. Okay, keep in mind that trading is risky, especially during volatile times such as this. Now, at the same time, we also want to maximize your time, and we certainly are appreciative of your presence here. So if you have got any questions for us, you don't have to wait until the actual Q&A session at the end of this webinar. You can go ahead and feel free to type them in now as and when something pops up, and we'll try to keep this as interactive as possible. All right. So without further ado, I'm going to pass it on to my good friend Lukman Otunuga, and he's going to take us through his outlook on the pound. Over to you, Lukman.
Thank you very much for that, Han. Now, I mean, who wants to talk about the pound first thing on a Monday morning, huh? Well, let's get to
That's
it.
why we're here.
So if you guys thought that the past few months was quite choppy and volatile for the pound, you guys should really fasten up, get your seatbelts and prepare for more action in the coming weeks. So fun fact, the British pound is actually weakened against almost every single G10 currency since the start of the year. So, if it wasn't even for the coronavirus developments, I don't think I could afford going to holiday outside of the UK, given how weak the British pound is. So as you can see with the pound right now, the pound is set to be vulnerable as hard Brexit risks loom, and we're looking for 4 key drivers that are really going to dictate where the pound trades in the coming months. Of course, the first one is the Brexit negotiations, and if you look on the chart to the right, we have a Brexit timeline on what to expect. So on the 31st, the Brexit day, I'll never forget that. That's when trade talks started. Now, starting from today to the end of the month, the United Kingdom and the EU, will come together and try to find some sort of middle ground, on Brexit negotiations and what future relationship the UK will have with the UK at the end of the year. Now, this is going to be very tense because we've had a lot of mixed messages. As you can see right here, if this month ends without no deal, or if both sides cannot find a middle ground, this simply raises the threat of a hard Brexit by the end of 2020, and naturally this is negative for the pound. And I think this is the last thing the UK needs right now, given how we're trying to really recover from the negative impacts the coronavirus has had on the economy. On the other hand of the equation, though, if we have a situation where both sides are able to find a middle ground by the end of this month, and it looks like a deal could be in place, this could be good for the British pound, which remains highly sensitive to Brexit developments. The second driver, of course, would be the Bank of England rhetoric. So there's been a lot of chit chat, especially over the past few weeks, over the Bank of England possibly going negative on interest rates. Of course, they've quelled these talks. Well, I feel that if economic data, over the coming weeks, it really paints a very gloomy picture of the UK economy. I mean, I'm talking about retail sales following a negative trajectory, purchasing managers index, staying in contraction territory, and all that stuff. This may raise, speculation over the Bank of England joining the sub-negative crew, and naturally, this will be negative for the British pound. And finally, broader investor sentiment. So over the past days, we saw that there's this sense of optimism that the worst is beyond us. Economies are reopening, and given how the British pound is seen as a riskier currency, I think the positive market mood has really influenced the pound's performance against the dollar and other major currencies. So these are the 4 things that I feel that will influence where the pound trades in the coming months. Now, if handy, we can go to the technicals for the British pound, the fun stuff. So there's a couple of outlooks we're looking here. So the pound US dollar could slip back towards 120. Now, I'm going to actually quickly load my charts. So let me just load my charts. So the reason why I'm saying this is because, there we go. The reason why I'm saying this is because, look, we know that the British pound is something, it's a currency that's, highly sensitive to, Brexit developments. And when we add the fact that we have negative economic data from the UK and the threat of a, hard Brexit by the end of 2020, this should really reduce attraction towards the British pound, with 120 acting as a key level of interest by the end of the month. Alternatively, though, if it's all, good news and roses, and we have this, positive market mood, and it looks like everything is going on the right path, the pound US dollar may trend towards the next key resistance level around 1265. Okay, I'll share back my screen with you, Han. There we go.
Right, thank you very much for that, Lukman. So yeah, now we're going to go ahead and move really quickly along to this next slide here. Lukman, did you have more on this on the pound section?
No, so we've literally covered it. So just in a nutshell, the pound is going to be really volatile in the coming months.
Okay, got it. Yeah, sorry, I was getting a sense that you maybe had more to say. Sorry, didn't want to interject. All right, so that was the pound. We're going to move quickly on to US stocks. Now, we're going to start off with a simple question then, and I want your participation. How many of you think that US stocks, be the S&P 500 or the Dow, let's not really look at the NASDAQ, right? Because NASDAQ is in a world of its own. But how many of you think that we could see a swoosh pattern? Like, you guys know Nike, right? Nike, the swoosh logo that they have. How many of you think we are in for a swoosh pattern for US stocks? Or how many of you, like me, are expecting a W path. In other words, perhaps the next leg from here will be a leg down before the real recovery, maybe later in the second half of this year. So go ahead and put your comments in the chat box. I want to get a sense how many of you think we'll see a swoosh and how many of you think we'll see a W. Now, I'll go into why I expect a W. Okay, so now fair, of course, we have seen US stocks been pretty resilient to downside risks for now, be it protests over the weekend. Even if you look at US futures right now, they are pointing to a day of gains when New York opens in about 5 hours from now, maybe, right? Now, I think a lot of that is driven because, look, when these big institutional funds, right, these pension funds, these institutional investors, when they look around, they've got very little options left to try and generate those kind of yields that their members and their those pensioners need, right? So if you look at fixed income, for example, the UK over there, where Lukman is, they sold their first ever negative yielding bonds, right? So when faced against those options, the question is, where else do you put your money? So that's why we're seeing this resilience in US equities in particular. For me personally, there's a lack of conviction on my part about how far this rally can go. Now, there are many voices out there who think we could see a swoosh. Some are like me, they think we'll see a W. So these are some potential catalysts that we should look out for. So one would be, say, a second wave of cases or lockdowns across major economies, especially in the US. There's all this talk with all these protests going on. You've got people out there en masse. If this leads to a surgence in coronavirus, they have to lock down some of these states again. Then I think that can be a catalyst for a sell-off. Another one is, of course, the potential policy retaliation between in China. We saw the speech from President Trump on Friday evening US time. Mike is not reacting there, but I expect some kind of response from China. I don't expect Beijing to lying down. So if we see that escalation, that tit for tat, remember that phrase you used so often last year, right? So if we see a resurgence of that, maybe this month or over the coming months, then I think that could be another catalyst, or the sheer realization that valuations have overrun. But I put that as third because markets don't really seem to mind that right now. So looking at the technical side, so I think the 100 daily moving average, that's your red line on your screen there, that's pretty key right now. It's testing it right now. Well, it's going to find support from the 50 daily moving average. At least we have seen that last month. You can see those two blue arrows there. You are seeing the 50-day turning higher, suggesting that there could be an uptrend here. The MACD as well, showing some upward momentum. It's not yet hit overbought territory. That's the line all the way at the bottom. It hasn't hit 70 yet. That's your RSI, relative strength index, right? So, but it's getting close to there, right? So these are some of the technical indicators I'm looking out for. Long story short, I'm still expecting a W when all is said and done. But hey, caveat, this is a personal opinion. I could be wrong. Now, I'm going to dive into a specific stock that has really garnered a lot of attention, and it ties in with our theme for this month. And this one specifically pertains to the tensions between US and China. So I think the key point I want to share with you is that it is our estimation that tariffs will be less likely now compared to perhaps other sanctions or other financial moves by the US administration against China and vice versa. Now, why do I say that? Because I think obviously policymakers in Washington and Beijing, they realize their respective economies are in a very different place now compared to last year. Last year, they could afford to absorb all the kind of tariffs that they were slinging back and forth. This year, the story is different, right? We have beset with a global recession. So I think tariffs are less likely. So it could be manifested through other punitive measures, right? So one of them is there's a bill that's being pushed through the U.S. Senate that says, you know what, Chinese companies that are listed in the States, because American regulators are not allowed to look at the audited financials of the likes of Alibaba and Baidu, etc. So they are saying, look, this is not fair, and this could be grounds for delisting the Alibaba from the New York Stock Exchange, right? So that is something that's weighing on Alibaba certainly. Now, obviously at the top there, from the fundamental perspective, Alibaba's sales growth target has been lowered this year. They are thinking about 27.5%. Initially, they thought it was 35% for this year, but because of the COVID-19 uncertainties and US-China tensions, they have reduced or lowered their growth outlook for sales for Alibaba. All right. Now, on the other side, though, Alibaba, in case you don't know, they're listed in two places. They're listed in New York and Hong Kong. Now, with the Hong Kong side, there's news that they could be added to the benchmark index called the Hang Seng Index by August. And if that happens, some money, some inflows could go into Alibaba, at least on the Hong Kong side. All right, so those are some push-pull factors that are going on with Alibaba. Looking at the technicals real quick, so I still expect it to continue with this downward trend. In fact, if you go, let me just go with slide. Just keep in mind some of these charts and lines that we drew were prepared last week, I think around Tuesday, Wednesday, right, Lukman? And then now the latest candlestick, that large green candlestick all the way on the right for Alibaba on the daily chart, it's still limited by that downward trend. So it's confirmation for me at least of this downward trend. But anyways, so it's a break below 194 could bring 189 into play. I highlighted this in the previous chart as well for those of you eagle-eyed observers. Downward trend to remain intact. We could see some rising tides, some risk on sentiment that could see some green candlesticks on daily charts, every now and again. But I think for Alibaba, they've got some bigger headwinds to contend with, again, namely US-China tensions, and also the COVID-19 uncertainties. All right, so let's look at what's happening in the equity space. Now let's go on to gold, which is the favorite of Lukman, and also I believe for many of you here as well. So back to you, Lukman.
Yeah, and who doesn't love gold? Everyone loves gold. I mean, imagine I was looking at gold prices this morning, and hypothetically, if you had a bar of gold under your bed at the start of the year, could you believe it will be worth 15% higher? I mean, if any asset or commodity has really thrived through this chaos and tension, it has to be gold. But moving forward, though, as the tides can see, I think gold's outlook is going to be really blurred and clouded by conflicting themes. So there's going to be a couple of key drivers that I think will really influence gold's valuation, in the coming months. Naturally, we have renewed US-China trade tensions. This has been an ongoing theme, ongoing theme that has really drained a lot of stamina from investors last year, and it seems it's coming back. And I think it represents a major element of uncertainty. And naturally, gold is a zero yielding asset. It's that gold is an asset that performs in an uncertain environment. So this should support the precious metal. However, though, on the other side of the equation, where there's this optimism of economies reopening after that extended lockdown period. Look at the US, look at the UK, parts of Europe, and I think for the time being, this should be enough to really cap gold's upside gains until we start to have more disappointing economic data that really shows the reality of how bad COVID-19 has really rattled the global economy. On my right, though, we have a chart. We've got gold, the dollar, and US interest rates. We know that gold and the dollar are inversely correlated. But what is really interesting is, the strong, correlation we have with gold and US interest rates. As we can see, especially, thank you, Han, for that, as the Fed started to cut interest rates aggressively, gold prices went through the roof. And, you know, a simple explanation for that is gold is a zero yielding asset, and it really tends to perform well in a, you know, low interest rate environment. Now, moving forward, where do we see gold in the coming months? If we look at the chart in the next presentation slide. So gold could make a run towards 1,800. Now, this is all hypothetical. The reason I'm saying this is because, you know, there's still really, you know, fears around the global economy. It was the IMF that, you know, did that gloomy prediction that world growth could, you know, experience, you know, a contraction not seen in a century. Now, that's seriously gloomy. But then on the other side of the equation, we know that the dollar is still seen as a, you know, prime destination of safety. And I think Khan was speaking about this, that, you know, who's going to win the tough tug of war? Is it going to be the dollar or is it going to be gold? Because, you know, investors are still rushing towards both of them. And, you know, this is why I think what we're going to see, you know, especially in June, is going to be quite interesting. But looking solely at the technicals, gold on a weekly time frame, you know, there's been consistently higher highs and higher lows. And, you know, we can see a strong resistance around 1,760 level, and a weekly close above this level could inspire, you know, gold bulls to charge to levels not seen since 2011, around 1,800. Now, if gold is able to break above 1,800, it will be interesting to see how much further the precious metal can go. On the other side of the equation, though, I think if 1760 acts to be a really stubborn resistance, you know, and the market mood continues to improve, you know, anything could happen. Gold may try to retest 1680 and 1610 respectively. This is where we see gold trading with this wide range in the months of June. Naturally, the key catalyst would be the US-China trade drama, as I think, even though COVID is a major market theme, as optimism, you know, jumps over economies, you know, reopening, and, you know, signs of the virus, you know, reducing, I think most of the attention will be back on Donald Trump and China.
All right, great stuff. So there's a section on gold, ladies and gentlemen, look, if you've got questions, feel free to post them in the chat. I see a couple coming in, but while we're waiting for more questions to come in, so that our behind the scenes can kind of tabulate them. Here's what we'd like to do now. Lukman can go ahead and take control of his screens, and he'll give you some step-by-step pointers about how you could potentially take advantage of some of these trading opportunities as you see fit. And he'll go through a couple of examples there that you can perhaps learn about. Okay, so the different kind of orders that we have on our platform, or the types there. So Lukman, go ahead and rest control of that screen. And in the meantime, now, let me just add my 2 cents on, well, I see a couple of questions on gold. Let me try and preempt this a little bit, not to steal a thunder here, Lukman, but you know, so personally, I am pretty bullish on gold. You know, and I think I said this before, right, Lukman? For those of you who were there for our monthly Outlook webinar last month, which Lukman was sorely missed that, but I said this as well. I think this is, in this kind of environment, I think gold is just waiting for any chance to take advantage of that weaker dollar. So that's why we saw 1760, I think, a couple of weeks back, and now it looks to be making another run towards 1760. And it's not just because you know, gold is priced in dollars, so naturally when one weakens, then the other goes up, right? But I also think that it's now time whereby you know, currencies, policymakers are having to make their currencies do some work. In other words, they're going to try and weaken those currencies, okay, or at least let market forces weaken those currencies, so that the exports for that country can be more competitive. All right, so if, let's say, US exports in dollars are sold in dollars, then if the dollar is weaker, then it becomes more competitive on the markets, on the international markets, when they try to sell it to Europe or the UK or Asia, right? So it's we are seeing, and it's not just a US thing, we're seeing many countries around the world trying to do that. So I think, in keeping with that broader global trend, I wouldn't be surprised if the dollar continues its downward path. A couple of months ago, I said it'd be resilient, right? Lukman, remember that, right? In that range, and true enough, it's in that range. And then over the last couple of weeks, yeah, over the last couple of weeks, it's now, I think, really testing that 98 psychological level. So this, long story short, this is a chance for gold to shine. So that's my take on it. But yeah, while I look through some of these questions, Lukman, back to you for some of these
Go to
potential
shine
orders.
through the market chaos. So going back to the pound US dollar, so in regards to what we were saying earlier about, what can play out and how there's going to be a lot of volatility. So these are just hypothetical setups. So imagine if we felt that, with how the Brexit uncertainty would hit weaken the pound, and we we were speculating that the pound could weaken against the dollar. And as we can see right here on the weekly time frame, we can see that 1.220 is a sticky level. And it suggests that if we see a solid weekly close below this level, it could actually open a path towards 120 and possibly 17750 in the medium to longer term. So if I wanted to act on this setup, I would place a sell stop order. So to place a sell stop order, you go to trading, new order, right here, type, pending, sell stop. My sell stop entry will be at 1.220. Now, for those who joined our webinars before and were speaking about, risk reward ratio and all of that stuff, and we're understanding how trading is a numbers game. So we normally try to aim for a 1 to 2 risk reward trade. So literally in this setup, if our take profits will be around 1 to 0, then really would like our stop loss to be 1 to 2 around 100 pips away. So stop loss will be around let's just say 1, 2, 3. And here we go. And this is how you place a sell-stop order in a bearish scenario. When I mean bearish scenario, a scenario where you feel prices are gonna trend lower. Alternatively, though, like as I said, anything could go up, it can go down. If the pound US dollar tries to take advantage of a weakening dollar, and it looks like the UK and the EU are in fact going to secure a trade or come to a middle ground on trade by the end of the month, the pound US dollar has the potential to push higher. Now, in this instance, we'll be looking for a possible intraday breakout above 125, which has proved to be a strong resistance. A breakout above this level could inspire incline towards the 1265 resistance and possibly higher. And once we see a break above this level, I think the support level will be around 1235. And quickly, just going back to gold before we answer the questions, it's similar to gold. Mr. Han right here is quite bullish on gold. I understand. The technicals speak 1,000 words. We can see that it's actually respecting an uptrend, especially on the weekly time frame. In this instance, one can place a solid buy stop around 1760. Let me place it right now. Around 1760, and I think what levels realistically 1800 is a respectable resistance level. We haven't seen this level since 2018. And in this instance, if we were to respect that 1 to 2 risk reward, I think the stop loss should be around 1780. Sorry for that. Price stop. Oh,
Okay.
okay. Yeah. There we go. All good. So that's literally how you place pending orders, and for instant executions, it's simply you just literally place it on the current market price. Let's answer the questions. We have a lot of
All right.
questions here, Han.
Yeah. All right. So since we are going on gold, I'm going to start with this one. This is a loaded one, Lukman. So have fun with this.
All
This
yours,
one,
man.
yeah. So this one asks, will we see another a new record high for gold prices this month? I'll tell you what. So my answer will be, well, to be fair to Lukman, I had a bit more time to look at these questions. So I've got a two-part answer to this. Well, number one, well, let's get to 1800 first, and then we'll talk. And then number two, be sure to attend our monthly Outlook webinar next month, and then maybe we can talk about it then. All right. So we're trying to hold these on the first Monday of every month, and we've done that. Again, this is our third one. So that's the intention for next month as well. But to answer your question, look, I think like Lukman pointed out, some potential dampeners in play right now. So although I'm bullish on gold, I'm not really expecting it to like really tear up, go on a tear here. So that's why we've been saying 1800 is likely. And for the record, the record high was back in 2012. Correct me if I'm wrong, Lukman. It was about 1920. Right? So to answer your question, will we see a new record high? Well, I say not yet. Let's see, how things pan out, because keep in mind there are a lot of uncertainties as well, right? So some very recent developments, if these protests in the U.S. then translate into, like we said, either second wave of cases or more lockdowns, we are seeing curfews now. So if we see the U.S. economy recovery that the Fed had been about, if that gets derailed, and it could happen overnight, we don't know, right? Then we could see some really bullish or even more bullish momentum for gold prices. Anything you want to add to that there, Lukman?
I think you've literally taken the words out of my mouth. Like, look, gold is going to be really sensitive to how things are playing out right now. Right now, it looks like prices, the fundamentals are in favor of gold to push higher, but things could change very quickly. Things can change very quickly.
All right. Ladies and gentlemen, I've just been told that it's a well, sorry, I'm in Malaysia, 3 p.m. now, my time, so 9:30 a.m. Allocate allotted time. But let's just go through a couple of quick ones. If you guys are okay with it, just let us know, and feel free to still send in the questions, and hopefully we'll go on until our end it. All right. I mean, we want to be respectful of your time, but we want to make sure that these sessions are productive as well. All right. So going by that little poll that we did earlier, so it looks like only if you don't mind me mentioning your name, Rahul is, or Rahul, as silent by Rahul, is with me on the W. The other three are expecting a swoosh. All right, so this comes down to you, Lukman. So it's now 3-2, 3 for a swoosh, and Rahul and myself for the W. What say you, Lukman? Swoosh or W? For US stocks, sorry, I mean US stocks, yeah.
You see, the thing about US stocks, Han, is how long have many people been calling that the end of the bull run in US stocks? Like right now, I don't think it's going to be a swoosh or W. Like, look, as things stand right now, there's so many things in the pot right now. I'm not going to give an answer. I'm not going to give an answer. I think come to me next month when we do the next monthly outlook, when we know where we exactly stand the global economy with trade tensions and developments, and I can give you a more meaningful answer to this.
Right. See, and another reason why I'm expecting a W, and I don't think I failed to mention this earlier, but if you look at the sell-off in March, right, and you saw how the ETFs are just resulting in such a rapid decline. If you look at, say, 2008, 2008, 2009, the bear market, it took about 12 months for it to like reach, from the high then all the way to its bottom, and the bottom, it actually bottomed out at about 53% lower. Right now, this time around, we saw that kind of decline 30+%, as I showed you in my chart just now, 30+% in the space of a few weeks. Right, so it's that suddenness, the velocity could play again moving forward, because we've got all these ETFs and passive funds at play. So that's why I'm not reading too much into these gains that we've been seeing since March 23rd. But at the end of the day, like I said, like, do I want my pension fund? Like, so in Malaysia, we are mandated by law to contribute to our pension fund for our retirement. It's a government-owned program, right? So, like as well, where do you want us to put your money for retirement, Han? And I will be at a loss as well, right? I mean, yeah, sure, have some exposure to gold and all of that, but you know, I cannot tell them to put it into fixed income, and they've got really strict mandates that they have to follow. So that's the scenario that's happening in Malaysia. So I totally understand the dilemma that these funds have. You know, where else do they put their money? You know, if the S&P 500 and the Dow and these US stocks are still giving them some gains, then why not, right? But again, these are just personal opinions. This is not to be construed as investment advice. All right. So tell you what, we are running out of time. Just one final question here on the US dollar here. Lukman, I've spoken enough. I'll give this to you then, Lukman. So how very broad but very pertinent as well, especially for those in the FX space. How weak will the US dollar go? How weak will the US dollar go?
How weak will the US dollar go? So right now, let me see if I can load a chart of the dollar index,
I know.
because I think it's best. Let me.
Yeah.
Could everyone see my screen clearly?
I will. We can't see it yet. We're still in a PowerPoint. Yes, I know we're 5 minutes over, but we'll do this and then we'll be respectful of the time, okay?
Yeah, here we
go.
Perfect. So I've got the dollar index right now, and yeah, Han has spoken enough. Let me steal the spotlight. So initially, because I need to choose my words, I don't want to go against what I said earlier at the start of the year. I was quite positive on the dollar. I know, Han, and my argument was that the dollar was seen as a prime destination of safety. It's the world's reserve currency, and no matter how bad things are in the United States, when you compare it to elsewhere, the dollar is still going to be the key spot. But as you can see right now, the dollar is significantly weakening. And Han has actually brought a strong point on how the dollar is weakening due to exports. And for especially United States, focusing more on the technicals rather than the fundamentals. We know fundamentally that the Federal Reserve is unlikely to cut interest rates anytime soon. I don't even think I doubt that the Fed may even go negative, even though there's been talks about that. So when we're looking at the dollar index, more technical and just looking at the key prices, especially if we zoom out into the monthly, right now, according to the dollar index, is trading around 98. If it was to break around this strong, support level, I think the next key point of interest on the dollar index would be around the 96 point. But then when we look at the dollar index, I think it's not only made up of the dollar, it's made up of the euro, the pound and the Japanese yen. So if you look at the euro has been appreciating due to the positive stimulus hopes. So I think this is another thing that may impact the dollar index's valuation. Technically though, it's bearish, and the breakdown below 97.80 could signal further downside in the medium to longer term. If you'd like to add to that, Han, that's no problem.
Yeah, well, actually, we are running out of time, but just to give you guys something to look out for this week. So you've got the ECB, that's the European Central Bank. They are set to make a decision on Thursday, June 4th. Yeah, June 4th. So market expectations are that, look, they are not going to move their interest rates, but instead they're going to add about 500 billion euros to their stimulus package. So that's the expectation. And if they deliver, then that could help support or maybe push the euro higher. So as Lukman mentioned, more than half of the dollar index, over 50% of the dollar index comprises the euro. So where the euro moves, it has a big say on the dollar index. So that's why I expect the dollar index to wane, not capitulate, not just fall off a cliff, but just kind of moderate and soften over the course of this month. All right. So thank you so much for all those questions and feedback. We got to do this before we let you go. Lukman, if you can give me the control of the screen again.
Absolutely.
I'm going to go through some of these social platforms that you can feel free to indulge in, and be sure to check out. We do spend a lot of time and resources making sure that we are in touch with good people such as yourself. So it's not just these kinds of webinars, but we are also very reachable across platforms. So of course, we have the website. You just go to forextime.com. For Lukman and myself, a bit of a shameless plug here. We have the market analysis tab. So that's where you go to first, right, Lukman? You go to forextime.com, go to market analysis, and then click on daily market analysis. And this will pull up. We update the website about 2 to 3 times per day with some of our commentary and also some themes that we are noticing in the markets, and we would certainly love to share those with you. So this is the latest one. I updated one this morning. So yeah, it's all right here. Yeah, that's mine, and that's Lukman right there talking about gold as well. Okay, so again, make sure you go to the website. Now, we are also on social media, obviously. Now, if you are ever inundated and trying to figure out, well, which social media platforms are you, the easiest thing I can tell you is to go to forextime.com, scroll all the way down to the bottom of the page, and you will see down here there's a whole range here. Okay, we are on Facebook, we're on Twitter, LinkedIn, Instagram, YouTube, Telegram. So whichever floats your boat, by all means, be sure to follow us there and interact with our content there as well. So let me show you our Facebook page. I'm a bit old school, so I tend to prefer Facebook. I'm not on Telegram and I'm not on Instagram. Lukman, are you on Instagram or Telegram?
Nah, man. Nah, I'm a bit old school as well. Just find me on Twitter.
Yeah. Yeah. So this is our Facebook page. And my PC is taking a while to load here, but we've got all kinds of reports that you can follow there. But also we've got plenty of media content, from video to graphics as well, that you can follow along. Stock of the week, for example, all kinds of cool stuff. All right, so that's on Facebook. Last but not least, Lukman, go ahead and give your Twitter handle so that your many fans can then follow you on Twitter.
Absolutely. So I think you can follow me at @Lukman_FXTM, literally. So at Lukman_FXTM, you know, or if you want to just make things easier, literally just type Lukman Otunaga on Google and you see my face plastered everywhere.
All right. So my Twitter handle is @Han_FXTM, and likewise, both Lukman and myself, we engage the media a fair bit. So you can look for search for Lukman FXTM or Han FXTM, go to Google and click on the Google News, and we are there as well. All right, so plenty of ways for you to reach us. So yeah, I'm being told it's now 11 minutes past. So thank you very much all for your questions, and we look forward to seeing you guys at our next monthly outlook, and hopefully they'll be held on the first Monday of July. Time really flies, Lukman. So again, thank you all very much, and stay safe. And yeah, just try to enjoy these trying times as much as you can. Thank you all so much.
Thanks, guys. Happy trading. See you all.